the irony of this, I mean, it's just so incredibly simple. And what is the public scuttlebutt right now? It's stunning how cliche this is, because I remember distinctly. In fact, I remember I did that video. In fact, let's see if I can show you, anybody who's sort of new to the site. So I did a interview with Da Vinci here. And the funny thing is that this interview that we did, I'm sure it's on the interneting somewhere, but it was basically right in here, right in this area here. This is where, the big conversation at this point was that this was a hyperwave. And because it was a hyperwave, price had to go back down to $1,000, which I think is a bit of I don't think it's really a good idea to pick very specific big fat round numbers like that, especially since $1,000 was going to represent greater than a 90% correction. Usually, in fact, actually, I think I heard that Simon Dixon had another broadcast recently. I think I guess Simon got caught up in the Celsius stuff. So I didn't watch the interview, but it's probably worth paying attention. I'll probably try and watch it through the weekend. Anyway, long story short, this window here, and the cool way that Ben has set this up, he set this up as a really cool grid. You can see 70, he likes to use this 72.36 to 86.18. The FIB levels, that would be like the middle of the reload zone, 61.8 to 78.6. You know how much Brian loves his 78.6 FIBs. And this is the cool thing. This is something that I think we've just added to the to our sort of analysis Quill Quiver. I don't know. What's the term that you use? Where you keep all your arrows. I think it's called a quiver. Anyway. This time study, the FIB time study, based on the halvening cycles. So these red lines are our halvening event dates. And I'm just so overwhelmed. I'm just so darn impressed with this, I gotta tell you. Don't know if I have the exact dates correct here. This might be an error on my part. November 28th, 2012. It was November 28th, eh? That takes it to somewhere in there. I did notice here, this 38.2 and this 38.2 seem to just totally nail the top. What's also interesting too is that if we use this one, for example, and we go, there's 38.2, the initial push, but if we go like sort of 1.382, or Andrew, who came up with this study, he said, well, if you go 1.14, 1.41, sorry about that, then you get sort of, and think of it, 38.2 or 138.2, 141 is pretty close. You get sort of like this band, and I think that's what this is. So there's 1.38 to 1.4. There is 38.2. This one here, 1.396. Maybe that's the 1.411. Anyway, point here is I think this works pretty darn well to paint a topping window. And then really the most important thing out of all of this is when do we get to 61.8? And so that's from this low all the way to here. So 0. Think of it and actually I was sitting in the car with Liam yesterday, and I really like this thinking that if you, and I've seen this repeatedly in my career, so, just try this out for yourself. If you have like a window in time in the market, what I've found is that usually what ends up happening is the market rallies up and hits its peak in very fast. And we always say that markets go up like 1/3 and then fall 2/3. So if you think about that, 1/3, 2/3, that's 33%. And then 66% of this is spent heading down. So I don't know. I'm just totally eyeballing that. But does that look like about a third? It's probably a little bit generous. But 38.2, right? That's actually close to 40%. So if we went that FIB study, then yes, it should look something along those lines, where the first sort of third of the window is spent in rally mode. And then 2/3 of the window are spent in correction mode. And interestingly enough, and I have no idea why, once you get to about 2/3 of this study, so as I said there a moment ago, 1/3 of the window will be spent rallying. 1/3, ironically enough, is actually going to be spent unwinding. And then 1/3 is actually going to be spent basing, getting ready for the next cycle. These aren't obviously the best drawn numbers, but hopefully you can understand what I'm saying there. So 1/3, 1/3, 1/3. And really, once you get to about this point right here, about 2/3 of the way through the cycle, that's when we want to really start paying attention. But usually, when an asset corrects about 70 to 80% of its previous range, this is like no-brainer investment window. Reload zones, all that kind of crap. And like I said, how often do you see Brian barking down the road that markets actually end up bottoming right off of 78.6s? As cautionary and as let's do a quiz. Who can remember what was I going to change my name to up here? Do you hear Brian talking about changing his name? Donna. Yeah. Hey, some of you guys do remember. So am I talking like that now? So, what I would just simply say is, what I would say? I can't force you to read this one way or another. You know this. But you want to make it relatively easy on yourself. I like the idea. Just get those bids working. You did want to buy. You were really patient and really disciplined. You did not chase up top here. We have now come into 61.8 to 78.6 zone. We are now at or below reload zones. Here is that 72 for Ben. I guess his number starts right around 72 or so and goes down to 86, which is, I guess, somewhere in that area. I guess around 10,000, he said, eh? So somewhere, I guess, 88.6 there. So, the irony of it all is that this is exactly what you guys are here to learn how to do. Don't chase. Wait for reload zones. If you're a nanny nibble, dollar cost averager, well, get to work.